Hello traders, Gary Wagner here. 10:30 a.m. in Honolulu. It is Wednesday, the 5th day of October, and this is the daily report for gold. We do have gold trading higher again today, trading up about $20 to $25, currently trading $16.40, and that is basis the spot market $16.42 in the December contract. When we look at the intraday activity, and to do that, I'm going to pull up a 60-minute chart of what we saw through the trading session last night. We did see the market, after coming and making a high the other day, which was right around 1680, the market did come back down and tested $1,600, just below that. It then moved back up, but at a point last night, as it was trading, it went and retested the $1,600 mark and is now once again currently trading higher. For that reason, and because of this increased volatility, I'm putting together a strategy in which we will be working with not only futures, but options rather than straight stops. When you have markets which have intraday swings of $100, the stops have not obviously been effective for us, and it is my belief at this point that we want to begin to accumulate from the long side base positions, as I believe this market will carry back up well over 1,700 and probably over the next, say, 6 to 8 months move back towards the highs that we saw just a few months ago. And as I said, for that reason, we will begin to implement a strategy that's a little bit more complex, but will allow us to weather this intraday volatility, which has gotten quite extreme. So for that reason, over the next few days, we will be talking specifically about option strategies and strategies in which we have either covered calls or futures, which are in essence protected with an option. And there's a couple of ways you can do that. One way, of course, is a put option. And so we'll talk about the different types of strategies that we can work with, as well as beginning to accumulate within this market. The one thing that I believe, and I believe more and more as I see this market trade on a day-by-day basis, and that is we are forming a base within this market. This is a 240-minute. It is a straight candlestick chart. And as you can see, I have put different levels. This is our Fibonacci retracement, and the Fib retracement really goes back from the beginning of what I call our July rally, in which we saw this market really steamroll from right around 1480 to just above 1900, a tremendously large move. From that move, of course, we witnessed a tremendously large correction. In essence, that correction took us back about 76% of the entire move. And so that when you get this kind of volatility, and you can see the volatility here, you realize that although stops and risk control are necessary, we are in an unusual time, in an unusual market that calls for a different approach, I believe, than just straight futures trades. Now, traders, when we look at our daily chart, this is a 140-minute chart, straight candlestick format, you can see that we talked about this. It formed that 3 river star variation. This was the initial call. We got our confirmation, of course, this big leg down. This is what stopped us out, only to see the market really return on the following day. But we're still stuck within a range, and that range, when we consider 1610, it did dip down below that. These are the 1600 prints here, and 1681. That right now, to me, is the range that it is caught up in. And we will see it break one way or the other. My belief at this point, as long as it forms this base in the way that it has, and as long as the fundamental news out there remains as bullish as it has, we have Greece right now where they are rioting in the streets. They probably will default on a payment. That comes in and out of the limelight pretty much on a daily basis, that we want to begin to accumulate positions in these levels. Now, we might consider putting in orders at 1605, 1600 to buy and see if we get another dip down in that area. I do not mind buying the breakouts, and I certainly don't mind buying the dips, but we have to be able to adequately protect ourselves from these large intraday volatile swings. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.